Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, I'm going to answer the question, should I buy an annuity from a B-rated insurance company? Well, the short answer is no, not in most scenarios. And I'll tell you why. There are a lot of companies that are popping up over the last 5 to 7 years into the annuity space. And we're seeing a lot of them being specifically in the MYGA world, where you get basically the CD annuity, where they're getting B ratings. They're short in staff. Like I've seen insurance companies with like 30 people on their staff, and that's the annuity company, and you're going to invest hundreds of thousands of dollars with them. Anyway, my opinion is stick with A minus or better with AM Best. I like to see it at a minimum 25 years in existence as a company. However, there are some exceptions. The only time that we recommend B-rated companies that we recommend versus the consumer telling us that they want a B-rated company is if there's some sort of niche problem that we're trying to solve that's hyper specific, right? And every single time we'll say, hey, this is a B-rated company, so this is a gamble. And when somebody wants a B-rated company, we always recommend to put no more than what your State Guaranty Association will fulfill in case the company goes under. So for example, in the state of Georgia, where we're based out of, $250,000 per insured is covered. So any money that I invested into an annuity over $250,000 and the company goes under, I'm only going to be covered for $250,000, right? And everything else is the SGA is just, they're not responsible for. So what I say is split up the companies. I'll give you an example recently of somebody who is highly intelligent, is trying to buy up MYGAs while the interest rates are so high, because right now MYGAs are guaranteeing between 5 and 6%. And he wanted to get as high as percent as possible without liquidity. And those were B-rated companies. And they have B-rated companies, by the way, will have higher rates because they're simply trying to buy up more business to build up more capital, right? And then it's really up to them how they manage that money to try to get that A minus or better rating, okay? And this gentleman's like, look, I'm in the state of Maryland. 250 is the SGA limit. I'm okay with it. I know what I'm getting into. I know the risk I'm taking, but I'm buying up like a half a dozen MYGAs from a half a dozen companies, and I'm running out of products to buy. And so in that circumstance, we're like, okay, well, if you're cool with buying a B-rated company, I'm cool with it. So if you're going to buy a B-rated company, keep it your SGA's limit. And if you don't know what an SGA is the insurance company's version of the FDIC, where if the company goes under, which is rare, they'll cover the contractual guarantees up to a certain dollar amount. So just go to Google, type in Maryland Guaranty Association, and it'll pop up, okay? But other than that, there's so many different annuity companies, so many different products out there that there's little to no reason to buy a B-rated company. They're just not. And you want to mitigate risk. You're going to be stuck with this thing for a long period of time. You might as well sleep at night knowing that the company is doing what it needs to do. Right now, there are companies. I've seen 3 companies in 2026 either get they got downgraded in their financial rating with AM Best, and 2 of them who are sister companies are looking for somebody to buy them out because the company didn't manage the money very well. They didn't manage the annuity company very well. And so the folks that own annuities from those companies, they might be turning to the SGA if they don't find a buyer for that. So very important. The insurance company, the stability and the financial history and strength is way more important than earning a higher interest rate or a higher income payout, because you may be getting that temporarily and that company may go under in the future. So what do you do about it? Well, you go to your favorite search engine, Google, Yahoo, Bing, type in the Annuity Expert. And then what you're going to do is you're going to come here and you're going to go to our calculators, and you go to our annuity calculator. You go to interest rates, fixed annuity rates. And then when you go to the annuity calculator, you'll get your real-time payouts. And these are life-based payouts. If you want joint life payouts, you need to request a quote from us. There is no obligation. And then you go to our interest rate page, fixed annuity rates page, and then we have folks update this on a daily basis. Today's 4/20. This was updated on Friday, April 17th. Insurance companies are closed Saturday and Sunday. And then we say, hey, here's the best 2-year annuity, 3-year, 4-year, 5-year. So all the A-rated companies, right? And then here's all the ratings, the interest rates, regardless of what the financial rating is. And then we have a table where you can kind of search through and do some digging. That's where I would start. And then if you really are being overwhelmed, you can just contact us. Call us at 770-755-1565, and we'll help you find those right annuities that will not only give you that peace of mind that you're with a good company, but also the highest interest rates or the highest payouts. Hope this answered that question. Like, subscribe, leave a comment, but please be specific on that comment so I can give you an accurate answer back. And we'll catch you on the next video. Thanks. Have a great day.